It's Matt again with Everyday Success. We're going to talk about cryptocurrency and the state of the market. Obviously, it was another horrible week in the stock market, but this next week should be a lot better. So, if we take a look at Ethereum, I really don't think it's hit its lows yet. The Fed have a meeting Wednesday on January 26th, and I think that the market's probably going to drop for a few days before that, and maybe even drop on Wednesday. And who knows, if it goes really bad and if they say something stupid, it might drop after Wednesday. But I think pretty much Wednesday should be our bouncing point where the market starts going back up, hopefully, because that's where we're really going to make our real money. If you've been listening to me online, you've been hedging, because if you're not hedging, then you're just losing money. So you should at least be hedging or betting against the market at this point, I would say. Remember, I'm not a financial advisor, so anything I say is not advice to buy, sell, or trade any stock or cryptocurrency. All I'm saying is what I would be doing. And right now, I think in the state of the market that we're at, you should either be hedging so you're not losing a bunch of money, or holding, stocks all the way down. I think you should be hedging the market or betting against the market. Hedging is safer because you'll really make money whether it goes up or down. And hopefully we get a quick turnaround on Wednesday. So let's take a look at everything. So this is Ethereum. Although it's dropped quite a lot, I really don't think this is the bottom yet. I said in previous videos that if it passed these $2,800 points, that it was going to drop really, really low. And I don't think we've met that mark yet. I think it's going to drop to probably $1,774 or $1,718, somewhere in that area. I got two little markers. I think it's going to basically go all the way back to where it was July 20th of 21. And then after that, hopefully it goes on another run. But I really don't think it's going to stop here, because everywhere it's at now, there's not really any big markers there. There's nothing that's really happened that is going to serve as a good resistance point. Maybe if you went back further to July 5th, you could find some kind of a resistance point here. But I just really don't think that's where it's going to stop. But who knows? It's crypto. They're not exactly trading on a lot of fundamentals here. It's kind of just a lot of young traders trading on whim. But besides that, I really do think it's going to get a lot lower. If we go take a look at Bitcoin, same thing for Bitcoin. We can add a mark here. I guess technically it could have a resistance point at 36,000, but I really don't think it's going to stop there. There's not a lot of resistance there, and it's very sporadic resistance, right? But then you have a strong resistance point down here at 29,000. So we'll see. Who knows? It could stop anywhere between on these small resistance points, but its next big level is 29,000. It seems to care about that level, so we'll see. But it doesn't look like it's done dropping, so I don't think it's really a good buy-in point right now. I'd want to see it turn around. Just like I've always said in the past videos, I want to see a stock or the cryptocurrency hit its bottom and then turn around for a significant amount of rise before I go buy back into it. At this point, crypto's not even really bouncing. It's just free falling. So that's certainly not the time to buy in. Maybe buy into little stuff. I bought into Shiba and Satama Inu. Stuff like that's fine. If you're going to buy some cheap stuff, that's not really that big of a deal. But if you're putting large amounts of money into it, you could probably buy it lower. Like even Shiba, I think, is going to go quite a bit lower. It's at least going to meet the market did the other day. Right now, it's at quad 020. It went down to quad 017, and it's really kind of hard to say how much lower it's going to go. But it's probably going to go lower. It's probably going to go to quad 015 at least. But it's incremental. Like, how much money are you really going to save at that point? It's pretty cheap. If you're buying smaller coins or tokens, you could probably just go ahead and buy it now. But if you're going to invest in Bitcoin or something, thousands and thousands of dollars, that's a big difference per. I would wait that out or wait Ethereum out. But if you're buying the smaller stuff, you could dollar cost average in and start buying it now. It doesn't really make that big of a difference. Let's see what else. So if we go to the IXIC, I know this is going to look really crazy on camera because I have so many resistance and support levels. I was going to erase them, but honestly, it's not worth it. This is what a real chart looks like. This is what a real chart looks like. You have 1,000 resistance and support levels, and then you can diagram out what you think is going to happen. I mean, it's a lot to follow, but if you get used to charting, I mean, this is really what a chart looks like. And so I shared last week what I thought would happen with the stock market, but then the stock market took a longer dip, and you have to be able to roll the punches. I took all this data based on the last dips and, any kind of recession that we had since the 2000s, and things change. Sometimes the pattern looks different. So I still think any of the points that I marked on here, it could hit those levels. But I noticed in 2015, there was a really big pullback that really looks very similar to what we're going through now. I mean, very, very similar. And I'll open up another chart to show you that. So let's take a look at a more similar time that the market had a pullback like this. In 2015, you see it looks very similar to what we're going through in the market now. And I made a little comparison for this market sell-off. It looks very, very similar. So I'm not really sure what's going to happen after this. We may open in the green tomorrow, but I think overall the market's going to be a little sketchy until Wednesday because the Fed meets. And I don't think the Fed's going to have anything to say, but everybody's worrying that they're going to raise rates early, which I don't think is going to happen, but it could happen. You never know what the Fed's going to say. The Fed could come out and say anything and choose to do anything they want. But I think that we're probably going to have sketchy markets. Maybe the market's going to go down more, which is what I think, or maybe the market's going to start going up until Wednesday. But more than likely, we're going to have a little sell-off until Wednesday with a mixed market, and then Wednesday, the Fed's going to come out and they're not going to say really anything at all, and I think it's going to cause the market to go up right here. And I think the market's going to go up for a little while, and we'll get back some of the losses we have. And then I think, it's a large possibility because we've been under the 200-day moving average for the NASDAQ for over a trading week, which is really weird. That doesn't happen very often. But like I said, the most similar time is in 2015. I think when we stay under the 200-day moving average for a little while, it's hard to get back up over it. So I think we're going to trade like this. And, there's a possibility that the market goes through the roof and it hops over the 200-day moving average and it goes really high and stays up there until June or so, until they start, really getting into deeper interest rate raises, and then it falls off a cliff. That's a possibility too. But if let's just say if it reacts like the NASDAQ did in 2015, it's going to bounce off the bottom of the 200-day moving average. Eventually, it'll finally pop up over, but then more negative news from the Fed when they do raise rates is going to knock us down, and we're going to fall off a cliff. So it's really going to be interesting to see that if we make it over the 200-day moving average or not. If we do bounce right back up and go over the 200-day moving average, I think we're going to have a really good market until probably March. Because when they come out in the middle of March and say that they're going to raise interest rates, we're going to have a little fall and then we're going to go back up. And then, that happens generally one or two times when they raise interest rates, but eventually we're going to have a fall and we're not going to come back up and we're going to have a deep pullback or maybe a recession. But I mean, you have to admit that this looks very similar to 2015. It's not very often that the NASDAQ falls below the 200-day moving average and then stays there for any amount of time. Usually it pops right back up. So it's very odd that, we're still down here. So this is what I think, it's going to be interesting to see if it's right or not. I mean, we're going to assume the 200-day moving average moves right around this line. So, we might be below the 200-day moving average for a few months. But it's going to be interesting to see. These stars right here represent Wednesday. So we're probably going to pop back up after the 26th. So if you look at the primary chart with all the resistance and support lines, you can see it actually lines up with a lot of them. So I think it is likely that this could happen. Or like I said, maybe after the 26th that we shoot up and maybe we go way up here. Maybe the market goes for a long run on the plus side. But I think no matter what, around the middle of March, we're going to have a dip. Whether we're up here when it happens or we're down here when it happens, I think we're going to be, for the most part, up and up until March. But in the middle of March, we're going to have a dip for a couple of days when everybody freaks out that they raise the interest rates. And then after that, we're going to go up and, we're going to keep bouncing around until you just take too many interest rates. The market can only handle so many interest rate rises. The market can only handle so many interest rate raises until they just fall off a cliff. Because the fear keeps building, And that's really what the market's moving on now, solely on what the Fed's going to do. So at a certain point, that's all the market's about. the Fed is controlling the market, whether it's by purpose manipulation or just a byproduct of their actions. That's really what's moving the market right now. So the other interesting part is when the pandemic happened, the Fed started just pouring money into the market, pouring money to the market. And I remember trading at that time, and the market would just go up and up. No matter what happened, no matter how horrible the news was, no matter how bad businesses started doing, the market just kept going up and up, and it just seemed like nonsense, like nothing stopped it. Well, come the middle of March, the Fed's going to start tapering and taking that money back. So I think it's going to be the opposite. I think the market's going to keep getting pulled back down and pulled back down no matter what happens. No matter how positive news comes out, we might pop up a little bit, but overall, I think we're going to slowly keep moving back down and back down. And, like I said, around June, that's probably going to be the point the market can't take it anymore, and everyone just gives up. They're going to stop fighting, and the market's going to go off of a cliff. I really wish the Fed wouldn't have started the market manipulation to begin with. I understand there's bigger reasons. They're trying to keep us from a depression. But at a certain point, it's not really based on fundamentals anymore. A lot of it is considering what the Fed's doing now. So it's not what you think about the company or what you think about the market or the economy. It's, is the Fed putting money in or taking money out? And I think that's starting to get a little ridiculous in the market because it's hard to read. You're no longer really basing it on fundamentals or how the earnings sheet looked for a company. It's just, what is the Fed doing to manipulate the market? And I think that's horrible. So hopefully that ends soon, because it's really hard to trade based on that information. Other than the fact that, when they start pulling money out, the market's going to go down overall. When they're throwing money in, the market's going to go up overall. So we're going to probably have some kind of a bear market coming up. And, we don't know how big the drop-off is going to be. But I imagine this time it's probably going to be a pretty decent drop-off in June. Because when the Fed's taking money out and they're raising interest rates, I mean, those two things don't sound like they go well together, right? It can't be positive for the market. So I think, I'm going to try to make some money in the meantime, make some simple trades. I'm going to ride my options up until maybe mid-March, and then I'm going to start holding money, I'll make little trades along the way, but really I'm going to wait till the middle of June and start betting against the market. I'm going to try to get the market at its highest point and make some options against the market. Maybe buy some puts or buy some calls for indexes like the SDOW or SQQQ and bet against the NASDAQ, because it's not going to go well. Might as well make money on the way down than sit there with our hands in our pockets, But like I said, so this is 3 different ways I think the market could go, but it could be any one of these versions. It could be a mix of these versions. You never know how far the Fed interaction and how far fear can take it one way or the other. So, these new yellow lines could be our markers, or maybe it shoots all the way up here to one of the other markers and back down. The whole point of this is just, I basically threw the top 3 different ways up here that I think the market could go in the next few months. And then I'm going to see how it goes. The market's going to start moving, and you're going to follow these candlesticks, and they're going to follow one of these outlines and give you at least an idea. You have to have some idea if the market's going the way you think, or if it's following, these important dates, these markers when the Fed talks. You have to have some kind of idea where the market's going. So if you don't plot something down, you're really just guessing. You're really just gambling at that point. It has nothing to do with, you having an idea where the market's going and making educated bets. You're just going to guess and gamble. And I don't want to do that. So the whole point of me posting these videos about, my predictions and where the market's going to go is I want to see if, the market and these candlesticks start charting and tracking on some of these different ideas that I have of what could happen to the market. And then maybe that'll give me an idea of how to trade. But just guessing and trading with my eyes closed isn't going to help anyone. It's not going to make me more money, and I'm just gambling with my money, and I don't want to do that. I think Monday and Tuesday are going to be a little rough. More than likely, they're probably going to be ending in red, even if they start green. And I think Wednesday we'll see relief, if not before then. Fed comes out mid-afternoon and says that they're not raising rates in some surprise, interest rate raise, which I really don't think is going to happen. But if it does, the market could certainly crash. If the Fed surprises everyone and raises interest rates Wednesday, I think the market would certainly take a big spill and then eventually recover. But I think that would be a horrible catalyst for the market. So let's keep our eyes out Wednesday and see what the Fed says. And I'll make another video and we'll review it and see where we're going. That's been a quick update. Make sure you subscribe to the YouTube channel. Come join our Facebook group and tell us your theories on everything. Comment below and let me know what you think about what I said. And safe trading out there. I'll see you soon.